I once saw someone finance a $20 t-shirt, 4 payments of $5. And the crazy part is, they thought they were saving money. Buy now, pay later. It's become the financial equivalent of a sugar rush. It feels good in the moment. You barely notice it happening. And then one day you wake up with 19 payments due and $3.74 in your checking account. And this is not just a few people. Buy now, pay later has exploded into a full-blown epidemic. Klarna, Affirm, Afterpay, these companies are everywhere. You go to checkout and the option, it's right there. 4 easy payments of $12.49 and your brain lights up like it's a Black Friday and you're getting a deal. But here's the catch. You're not actually saving any money. You're just time shifting the pain. You're renting dopamine. We've completely normalized financing burritos, and that's not a joke. Klarna is now integrating into DoorDash. You can split a $14 Taco Bell run into 4 installments, which is actually hilarious once you realize that a massive chunk of Gen Z is literally financing fast food. People are doing this for deodorant, for pet food, app subscriptions, even digital outfits and video games, and Fortnite. And we're not just financing large purchases, we're financing tiny ones that used to be no-brainers. And that's the goal. Death by 1,000 microtransactions or microloans. Buy now, pay later was supposed to be the modern solution to the problem of not having any money. It was marketed as the first consumer-first, interest-free alternative to credit cards, but when you peel back all those layers, you start to see what it really is. Behavioral debt engineering. And these companies, they're geniuses at it. They use every psychological trick in the book. The pain of buying, gone. When you swipe a card, there's already a disconnect from the pain of spending. But when you split it into 4 installments, your brain barely even registers it. You don't even realize you're spending the money. You don't feel like you just spent $100. You feel like you just spent $25. It's financial anesthesia. And the kicker, you still owe the full $100. It's just hidden behind a time delay and a pink button that says pay later. It doesn't even say it's a loan, but these companies know exactly what they're doing. Bright colors, pre-selected payment plans, limited time offer countdowns. Every single pixel of the checkout page is designed to reduce friction and make you click yes. And that yes is addicting, especially when you're young, you're broke, and you're trying to keep up with a social media feed full of influencers showing off their $400 skincare routines and $800 travel fits. So what happens? You say, it's just $40 now. I'll worry about the rest later. And later never comes. And when it does, you're juggling 6 different payment plans, all due at different dates with different late fees. You might think, well, at least it's interest-free, right? Sort of. Sure, if you pay on time, there's technically no interest, but over 1/3 of buy now, pay later users miss at least 1 payment, which is astounding. And when that happens, the fees kick in. $15 here, $10 there, and it snowballs fast. Some platforms charge up to 25% of your purchase in late fees. That $100 you tried to split into 4 payments suddenly costs you $125. And now you're in the exact same position as someone who used a credit card irresponsibly. Except worse, because at least with a credit card, you're building credit. Most buy now, pay later programs don't report to credit bureaus, which means your payments don't actually help your credit score. But your missed payments, they can still destroy it, so it's only the negative. And remember, these companies, they're not doing this out of the kindness of their hearts. They're not consumer advocacy groups. This is revenue engineering. They make money in 4 different ways. First, from the brands that charge stores 4 to 6% per transaction, which is double what Visa charges. Second, they make money on your late fees. Third, they sell your shopping data. Yes, your burrito preferences are being auctioned off right now. And fourth, they bundle up your debt into financial products and sell it to Wall Street. That's right. Your 4 payment Nikes are getting securitized like a mortgage. And this isn't a fintech revolution. It's a debt trap with better branding. And the biggest danger, it's not the tech, it's the mindset. Buy now, pay later has convinced a whole generation that they can afford things that they absolutely cannot afford. You want the new iPhone? No problem. $250 today and then $250 every 2 weeks. You want concert tickets? New clothes? A Dyson Airwrap? Throw it on Affirm. Just keep scrolling. It's a permission slip to live beyond your means. And before you know it, you're in what economists call loan stacking. Multiple loans, overlapping due dates, and a budget that's now 40% repayments and 60% panic. I talked to one person who had 11 active buy now, pay later loans all at once. 11. They were paying like $32 every 2 weeks to Klarna, $49 to Affirm, $19 to Zip, and had no clue when any of it ended. According to a recent study, 69% of buy now, pay later users are already in credit card debt, and nearly 30% of them are between the ages of 18 and 24. Now let that sink in. People who can't legally rent a car are now juggling 5+ lines of unsecured debt for Uber Eats and sneakers. It's not financial freedom. This is a treadmill made of lava. And here's the worst part. It actually feels like you're being smart. It feels like you're avoiding interest. It feels like you're spacing things out responsibly. But you're not. You're just delaying the crash. And if all that wasn't bad enough, here's the part that almost nobody's talking about at all. Buy now, pay later, it's not a personal finance risk. It's a systemic one. Because this is a whole new class of unregulated, non-bank consumer debt. And it's growing in the shadows. These loans, they don't show up in normal transactional credit reporting. They're not overseen by banks or government agencies. They're not subject to some same consumer protections or capital requirements that credit card or personal loan would be. In short, it's shadow lending. Affirm, Klarna, Afterpay, these are tech companies, not banks. They don't take deposits. They don't follow the same rules. They don't have the same safety nets. And that's what makes them really dangerous, because they're issuing billions of dollars in short-term debt without the same kind of oversight that exists in traditional finances. In fact, some of these companies, they don't even keep loans on their balance sheet. They originate loans, then they package them up, just like mortgage-backed securities. You remember those from 2008? Little securities, and they sell them to asset managers, hedge funds, or even pensions funds looking for a safe, short-duration yield. Your retirement might be invested in these right now. It's the same playbook that fueled the housing crisis. Originate, offload, repeat. Except this time, instead of housing debt, it's high-volume, low-dollar personal loans used to buy hair dryers, sneakers, and takeout food. And the worst part is there's no central visibility. Regulators are flying blind. The Fed can't see this debt piling up. Banks don't track it. Consumers don't even understand that they're in it. We're creating a parallel credit system, one that's growing fast, loosely regulated, and highly sensitive to a downturn. If the job market weakens or inflation eats into paychecks, or we hit that recession, that elusive recession, this entire model collapses. Defaults surge. The institutions holding the debt panic. And because it's all private, nobody knows what it is and who owns what until it's way too late. It's a house of cards being built under the table. So what do? Rule number 1, if you don't have the cash, you cannot afford it. Period. Credit cards, buy now, pay later, payday loans, doesn't matter. If it's not in your checking account, it shouldn't be in your budget. Rule number 2, if you're going to use buy now, pay later, use it like a credit card. Know the full price. Set a calendar reminder for every payment. Set up autopay if it'll let you. And make sure the money is already in your account before you click yes. Rule number 3, never, ever stack loans. If you're already financing weekly expenses like groceries and gas, something's already wrong. You're not solving the problem. You're putting it on layaway. And number 4, pay attention to the bigger picture. Buy now, pay later, it's going global. Klarna is in 45 countries. Affirm is signing deals with American Airlines. These aren't payment processors anymore. They're shaping consumer behavior on a mass scale. And the behavior is debt-based consumption with no brakes. If interest rates spike again, or the economy slows, these easy payments, they'll become missed payments. And all that bundled debt, your debt, it's gonna look like subprime mortgages did in 2008. And when it collapses, and it probably will at some point, you won't be protected. They'll sell your account to a collections firm and move on. And you'll be left holding the receipts. So be smart, be skeptical, and when you see that pink split into 4 payments button, remember that button does not care if you go broke. It just wants you to click it. Because the easiest way to trap someone is to make them feel like that trap is their choice. Anyway, thank you so much for watching. If you enjoyed this video, please give it a like, subscribe, and comment down below letting me know if you use buy now, pay later, or if you think it's stupid. Thank you so much for watching, and I'll see you next time.